To a 25-year low in Hong Kong. Plus, PEP review. The ECB starts an evaluation of its pandemic bond buying program. According to the FT, policymakers are expected to discuss how long it should continue in the coming months. Matt.
All right, take a look at futures. We are looking at big drops, especially on London FTSE futures. They're down more than the continental futures, although continental futures are doing a pretty good job of catching up in terms of those drops. Take a look at now the live cash trade as markets open up. We'll pull up the global macro movers screen on the the left-hand side, left-hand column here, the GMM. You'll see the live trade start to populate. The FTSE always the first out of the gate, down 0.6%. So not only not as bad as the futures, but also not as bad as the percent misprice predicted, although it is increasing those losses, and now we're getting closer and closer to 1% drop on the FTSE, and now we've hit it. The CAC and the IBEX both down 0.6% straight at the open, so you can see that we're getting the continent down with a little bit more than half of the losses that we see in terms of Britain's biggest stocks, and the FTSE continuing to fall now down about 1.1%. So as we see these equity indexes open, none are expected to open in the green. We're going to see just continued losses, 0.5% down, for example, in Milan on the FTSE MIB. Anna?
So, Matt, European markets opening lower. That's as the FX market is sending signals that there is more risk aversion to come. US-China tensions and continuing pain in the tech sector are also themes driving the market down at the start of this week. Joining us now is Paul Markham, Newton Investment Management, Global Equities Portfolio Manager. And there are clearly, good morning to you, Paul. There are clearly interesting things dragging down the bank sector today. We've got the banking stocks under pressure. HSBC down by 2.9%. And that is the biggest falling sector on the stock 600. Away from the details of these investigations, there's been a lot of talk about whether cyclical stocks, whether value stocks were going to catch up with the growth stocks where we've seen such a surge. Do you see any reason to be interested in banks at this point?
Morning, Anna, and thanks for having me. Well, we've been sort of watching the derating of these companies really since the end of the financial crisis, or the middle of the financial crisis. And the valuations are doubtless very attractive on an optical basis, trading at very deep discounts to book in most cases, low earnings multiples. Clearly, in the near term, there isn't much dividend yield available because most of the dividends have been suspended within the sector due to regulatory pressure. They will be expected to come back. But I think what we've begun to really feel over the last several years is that they are entering what you may call value trap territory. And it's only really some kind of reflationary impulse which will be accompanied by higher interest rates, which could probably bail out the banks to some extent. I also think that we should expect structurally lower returns on equity than we've seen in the past, so that book multiples may not be able to progress much above 1, even if we started to see some kind of reflation. So there's probably a value trade in there, Anna, somewhere, but I think as a structural long-term hold, they may not be particularly attractive even at these levels.
These were big concerns in 2009, 2010 as well, Paul. Wondering, what do you see that's different? What differentiates what we're going through now from what we were going through in the financial crisis?
Yeah, it's a great question, Matt. And I think the main difference is that the share count is now likely to be stable in the banking sector. So the necessity to raise significant amounts of equity has passed. Most of the banks are quite well capitalized. And of course, the regulatory regime which has come into play in most parts of the world will mean that the need to raise more equity, firstly, won't be necessary from a basic equity standpoint, but also from the point of view of the way they run their businesses in most cases, although some of the news that we've been seeing may be somewhat concerning in that regard. I think that the other thing that's really changed for the banks is that the necessity to be the good guy rather than the bad guy in the eyes of the public will be something which bank management will be very keen to do. We've seen the extension of loans to distressed sectors and maybe some loan forgiveness or a tolerance of bad loans coming in as well, which will crimp returns. So in a sense, there's almost swapping one set of problems for another. But I think the share count difference is the main differentiator to back then.
Paul, in the tech sector, obviously there's been a lot of focus on the big rally we saw in tech stocks and then the falls afterwards. There's also a lot of focus on the role of the US government, of the Chinese government, on the way that these two parts of tech are perhaps increasingly treading their own paths and tripping over each other a little. Do you see this pushing up the price of tech for consumers? I know that you've been focused on the implications for some of the supply and pricing of semis. Is this going to be something that drives some inflation?
It's possible, certainly, Anna, and the tech supply chain will be disrupted quite significantly if you take a quite conservative interpretation of the executive order which was signed by the Trump administration to restrict interaction with Chinese hardware suppliers. It may take a while to feed through. There's always a cycle and we get inventory build-ups and so on. So sometimes the timing of that is difficult to ascertain. I think one thing that governments will have to be a bit careful about is in terms of coming down too hard on tech companies, both from the point of view of the hardware suppliers, therefore really impacting most on handsets, but also the service suppliers, you know, the companies which do food takeout or internet search. And those have been a real godsend in many ways to consumers over this whole lockdown period. And I think to vilify them may not be politically smart. I think it may well drive both parties into a sort of backroom discussion around tax take, and that's something which is another question entirely. But I think for the near term, I don't think we should expect to see an immediate impact on the price of tech hardware, but it could well come through if this persists for a period of time.
We see concerns or different opinions around tax take on tech between the U.S. and Europe, also concerns or differences of opinion between the U.S. and Europe on how to deal with Iran. Is this rift, you think, getting bigger, Paul, and how does that affect your view on investing?
Well, I mean, I think that the sense that the European Union has now come into quite a different phase from the point of view of its relationships with foreign parties is quite significant in the sense that it sees itself as the only sort of global-looking major institution or superpower right now. And that's something which may over time be quite advantageous in some ways. However, I think where the devil of detail is the parties with which the European Union may decide to engage rather than step away as, for example, the US has done in some cases. And some of those regimes aren't necessarily seen as being particularly savoury or necessarily desirable to do business with. And so that's something where the European Union will have to tread very carefully. I think the sort of standoff between those three big global powers, the US, China and the European Union, is likely to see some quite different foreign policies put in place. So I think that there will be quite a noisy set of geopolitics over the next few years, certainly, Matt.
Paul, thanks very much. Stay with us. Paul Markham, Newton Investment Management, Global Equities Portfolio Manager. Lots more to come with Paul. Coming up on the program, Donald Trump celebrates the TikTok deal, but as the app's Chinese owner retains ownership of the company, is this a real victory for the president? This is Bloomberg.
to increase the pace of change.
You notice a lot that women are given an opportunity when no one else wants to do the job.
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
We call on men. Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Women leaders, if you look at their careers, have also built up a level of trust.
We could come out of this pandemic era turbocharging gender equality for the future.
That was candidate for WTO Director General Ngozi Okonjo-Iweala and Julia Gillard, former Australian Prime Minister, speaking to Bloomberg ahead of this week's Equality Summit. You can catch more of that interview right here on Bloomberg TV on Wednesday, the 23rd of September, as part of the Equality Summit. Coverage kicks off at midday UK time. Matt?
All right, I want to first talk about some companies taking big hits in the cash trade. Drillish, 1&1 Drillish, which is essentially a unit of United Internet, both German internet companies here, taking a huge hit, dropping, losing about a fifth of their value right now because of cuts in their guidance. So keep an eye on German internet companies. That's $12–13 billion worth of market cap dropping down to less than 10. I also want to point out that Nikola shares are down about 24% on TradeGate versus the close on Friday after the company revealed that Trevor Milton will resign as chairman, and a lot to talk about there. But I want to get away from the technology companies and into London pubs right now, because we're seeing shares there drop, and we've got Paul Markham with us from Newton Investment Management, Global Equities Portfolio Manager. Paul, regardless of your possible take on London pubs, we see those shares dropping because of the worry about a lockdown coming back, and it's going to affect far more than just J.D. Wetherspoons. Are you concerned?
Yeah, I mean, there's been a quite well-trailed amount of press coverage over the weekend that there is about to be some kind of further move to a tighter lockdown situation. It doesn't appear that we're going into something akin to what we had a few months ago, but it does look as if something will happen. I think this is going to be a real concern for equity holders, primarily, really because the amount of recovery necessary to really get these businesses back on track is going to be cut and crimped again. And I think the question will have to be asked by investors, how many more times are we going to see this happen? And I think there's probably a desire among many parts of the population to see some kind of easier or some sort of trying to live with the disease, but that's clearly politically very difficult. So I think that you'll continue to see pressure on the leisure and hospitality sectors, and certainly from the point of view of the UK, that the pub sector is likely to be in the eye of that storm, I would say.
Yeah, it's interesting. The WTO, once again, over the weekend, calling on countries to learn to live with this disease, as you say, Paul. But meanwhile, everybody fingers crossed for a vaccine, of course. Do you think then that from a market perspective, we very quickly move from further restrictions on daily life, which I should point out already we have quite heavy restrictions on a fifth of the England population and a bigger percentage of the Scottish population. Should we jump from that to what kind of extended support can we expect from central banks and also from governments in terms of extending furlough schemes, extending loan guarantee schemes to businesses, maybe further rate cuts and more QE from central banks? Is that going to be the vibe once again over the winter?
I think it will, Anna. I mean, we saw in a previous segment that there was a discussion at the ECB around how long to keep measures in place. I don't think there's any option. I think they're going to have to continue with that. Rate cuts, I think negative rates are something which central banks are very wary of. They're a trap that it's quite hard to escape from. So I think they may be fighting shy of those, but we will certainly see continued QE-style policies. On the government side, that's a much more interesting and varied picture, according to geography. We've already seen some quite far-reaching continuation policies of support come in continental Europe. The UK has been rather different on that. And I think the UK government is in a position of treading a fine line in its own eyes between maintaining support for sectors that need it, but also creating a situation where quite a few employees may not want to go back to work and just be happy to take the money. And I think that's something which it's very keenly aware of. So there'll be continued debates. You may well see shorter term extensions of these policies rather than sort of putting them through to the end of 2021, as has happened in Europe, for example. But I think the Chancellor and the Treasury will feel some pressure to do something.
All right, Paul, thanks so much for joining us. Paul Markham from Newton Investment Management. He's the global equities portfolio manager there, and he's going to be joining us again on Bloomberg Radio. So if you want to hear more on Paul's thoughts, just join us in London on DAB Digital. Now, coming up on this television program, leaked documents involving about $2 trillion in transactions reveal how some of the world's biggest banks have allowed criminals to move dirty money around the world. Allegedly, this is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are almost 20 minutes into the session and looking at drops of more than 1% across European equity indexes. The FTSE down 1.7% on concerns of a renewed lockdown. Now, Brian Moynihan, chairman and CEO of Bank America, told Bloomberg in an exclusive interview that there should be another round of federal stimulus to help the U.S. reach a full economic recovery from the coronavirus pandemic.
Our basic belief, our research team, is that the United States will be down 4% for the year, and then next year will be up 5% or so. But the key is to think about it quarter by quarter. You had a deep drop in the economy last quarter. You're back up to where 95% of the economy is back, basically restored on a quarterly basis, and then we're going to work out from there. But behind that was a 1 to 2% growth economy. So the idea of it recovering that last 5 percentage points, tomorrow morning, it's going to take a while to grind through that. Now, the reality is every estimate, including you heard from Chair Powell yesterday, has gotten better rather than worse. And why is that? That's because consumer activity stays strong. So the fiscal stimulus the monetary stimulus, the programs the Fed had, between the government administration, Congress, between what the Fed did, they basically, filled the hole, for lack of a better term, to bring the economy back up to level. And now we got to let it work out from there. And they probably need more stimulus for very defined places that are still in difficulty: restaurants, state and local governments, schools, performing events venues, some of the industries, airlines, and other things that you just can't have people do at the rate we had before. But the rest of the businesses, the dentist's office is back busier than they've ever been. So what do we see? Consumer spending is up year over year. That's up year over year, and that's good news. And so we're seeing it start to grow finally. It was growing at 10%, it fell, and it's worked us all the way back to even, and we'll see it probably start growing year over year. We're seeing it grow year over year so far in September. We'll see how we end up. So that's good news for the economy, meaning that amount of activity that goes on in our economy is restored.
Brian, you said it. Chair Powell said we're better off right now than we thought we would be at this point. But he also said there's a lot of uncertainty out there. And I'll name three of them. You mentioned one, fiscal stimulus, further fiscal stimulus. How badly do we need that? We have an election coming up. And by the way, there's the coronavirus. We don't really know about a vaccine.
And I think this is a healthcare crisis, and I said it back in March, and I said it even with you a few months ago in our interview. People can't forget that this is a healthcare crisis, and so what's happened over the last 6 months in the healthcare crisis has gone on longer than that is you're seeing the potential for a vaccine, but importantly, you're seeing better just behavior to keep the thing from spreading as fast. So as we're seeing it in the Northeast, for example, you've seen it crest over, and the infection rates are much, much different than they were early on. And you're seeing that the infection rates fall off. That's good news. And you're seeing the treatment regimens being different. And you're also seeing, because of the personal behavior, the people higher risk staying even more careful. The impact of the virus is still hugely hurtful to the people who get it, but not as bad outcomes. And so that's all good news as we wait for the vaccine, which is sometime out there over the next several months, and that would be good news. But until that's in everybody's arm, you're still going to have the drag of, will people go back to their behavior before? So that's the one thing. It's a healthcare crisis, and that's solved. What we need, I think, is pretty straightforward. You need more stimulus for the people. If you think about the analogy, we're all on one side of the river, and we all had to cross a river. We all needed a bridge. And so a lot of people are across the river. Certain segments of the economy, that are even doing better than they did before the crisis. Other segments are doing just fine. Take the medical industry is wholly back to normal now because the hospital capacity doesn't need to be held aside for the virus treatment. The housing industry is strong. The construction industry is strong. So those are across the river, so just let them go. Where you need help is restaurants and things like that. And so the next round of stimulus ought to be focused again on the areas that need the most help. And so PPP, the next round, should there be a second bite at the apple? I think so for the certain companies, because this went on longer than we thought it was going to go on.
That was Brian Moynihan, Chairman and CEO of Bank of America, speaking exclusively to Bloomberg. Now, leaked documents involving about $2 trillion of transactions reveal how some of the world's biggest banks have allowed criminals to move dirty money around the world. Bloomberg's Danny Berger has the details of the so-called FinCEN files. There's been a lot of journalistic activity around this in many places. Danny, what do we know about these FinCEN files? What do they show?
So, Anna, they're called the FinCEN files because they're filed by banks when they see suspicious activity. They're called suspicious activity reports. They're supposed to file them to the Financial Crimes Network, hence FinCEN. It's a part of the U.S. Department of Treasury. And they had been concealed from public, but BuzzFeed got their hands on thousands of these reports and shared them with the International Consortium of Investigative Journalists. And so what they found is about $2 trillion worth of transactions flagged as possible money laundering or other financial crimes. So it revealed things like possible profits from drug wars, fortunes embezzled from developing countries, as well as the enablement of Ponzi schemes. Now, one of the concerns, though, this report highlights isn't necessarily that these exist, that they're being filed. The concern is that once they're filed, not much happens to the banks. Yes, they can be used by different U.S. Law enforcement agencies, but they stop short of really halting these banks' activity with money laundering. In some cases, reportedly, these banks take years to actually file these reports. And a lot of big names are caught up up in this, Deutsche Bank, over $1 trillion was flagged between the period that BuzzFeed saw of possible financial crimes. There are things like Standard Chartered allowing a Ponzi scheme, HSBC allowing a Ponzi scheme to move more than $15 million.
All right, but of course, these red flags were raised, as you say, by the banks themselves. So, that's interesting, $2 trillion in 20 years. HSBC shares are getting pummeled, falling to more than 20-year low, 25-year low. How much of that is on this report or otherwise from China concerns?
It's certainly somewhat based on this report. We've seen a lot of the banks mentioned fall, but China might be considering adding HSBC to a list of companies that possibly threaten national security. This was reported by the Global Times, of course, the Communist Party's paper, so it's almost certain they're going to be added to this unreliable entity list, which will greatly affect their ability to do business. Matt, Anna?
Danny, thanks very much. Bloomberg's Danny Berger. Up next on the programme, it's the Brussels edition in our weekly focus on all things EU. We'll bring you an interview with the European People's Party leader, Manfred Weber. European equity markets move to the downside this morning. Stock 600 down by 1.5%. The London market under pressure. Banks falling. Hello? We're down by more than 2%. European market open, 8:30 in London, 9:30 in Paris or Berlin. 30 minutes into the trading session, which is considerably weaker, down by 1.4%. The banking sector under considerable pressure. We've got here in London, Barclays down by more than 5%, HSBC and Standard Chartered both down by more than 3%. Concern around these FinCEN reports that have been released, a lot of attention. They are getting a lot of attention, and we do see banks under pressure. We also see, though, more broadly, stocks related to leisure and free time under pressure because of talk of further lockdowns coming, certainly in London and possibly other parts of England as well. Let's take a look at some of the stocks then. So broadly speaking, we're weaker, down by 1.4%. And this is the picture for you in terms of the individual sectors. As I mentioned, the bank sector is under pressure today, so we've got that in the mix. We've also got travel and leisure stocks not doing all that well. As I mentioned, the pub sector in particular is underwater. Insurance, autos and parts also weaker. Healthcare, utilities and technology, the three that are doing the best, even though they are also in negative territory. So a fairly defensive look at European equity sectors this morning. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Concerns are mounting that the UK may need a second lockdown to stop the spread of the coronavirus. Prime Minister Boris Johnson is set to be told today that the nation is at a critical point in the pandemic. There are expectations that local restrictions could be extended to London. LBC is reporting Mayor Sadiq Khan will recommend tightening the rules today. The death of Justice Ruth Bader Ginsburg has thrust the Supreme Court into the political spotlight. Republican leaders in the Senate are hoping to rush through a replacement, with President Donald Trump expecting to nominate his pick this week. But Democrats are warning of a constitutional crisis if Joe Biden wins the election, yet Trump's candidate is the one confirmed to the Supreme Court. The European Central Bank is reportedly launching a review of its pandemic bond buying program. According to the Financial Times, it's looking at how long it should continue for and if its flexibility should be extending to older programs. It was exempted from some of the ECB's self-imposed rules that constrained its original asset purchases. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura right there in London. Now, EU leaders are meeting this Thursday to discuss issues including industrial strategy and tensions with Turkey and Russia, of course. Ahead of the summit, let's now go to Brussels, where our Maria Tadeo is standing by with an important guest. Maria?
Exactly. And look, what's really top of the agenda is the situation in the Mediterranean. This is the drilling, the gas drilling that is going on and that has really unleashed tensions between Turkey and Greece. And to talk about this, we're joined by Manfred Weber, who is the head of the European People's Party in the European Parliament. He's also a member of the CDU in Germany. And Mr. Weber, we're really happy to have you on the show. And I have to ask you, your views on Turkey are very clear. Turkey does not qualify to be a member of the European Union. Erdogan has at times blackmailed the European Union, and there needs to be a response that is coordinated between all member states. So what does a unified political response look like to you by the end of the week? Is there more sanctions?
Oh, hello, good to see you. First of all, the main message to Turkey is that they delivered in the last years a very aggressive approach toward the European Union. We saw it with the migration flows beginning of this year, where Mitsotakis, the Greek prime minister, defended the external border. We saw the Hagia Sophia, the religious tensions. We saw the breach of international law in Syria, also in Libya, the interventions there. So that is what we experience, and that's why Europe has to stay together. And the Greek and the Cypriot interests are the European interests. We are one family. We are a union. And that's why, for me, the most important signal for Thursday this week is Europe has to stay together, has to unify, and have to send a clear signal to Erdogan. We want to have a partnership, but please stop your aggressive behavior.
So based on what I hear, you're saying sanctions may not be needed if we do see clear de-escalation from Erdogan. So I wonder, what does that de-escalation involve?
Well, we had last week a positive signal that was that the ship about the illegal gas drillings in the Mediterranean Sea was stopped by Erdogan. That was a first positive step of de-escalation, and hopefully they both can agree on talks on common understanding how to use the gas. If not, if they cannot agree, they have to go to 9.5. They have to respect the international law, and Kyriakos Mitsotakis is ready to do so. So hopefully Erdogan is also ready to do so. So a first positive small signal was there, but the list is long, and that's why we need a general discussion. I and my party, the European People's Party, we don't think that Turkey can join the European Union. We need a fresh start of the general relationships between Europe and Turkey. And there is a lot to discuss about the economic development in Turkey, where the customs union, the access to the European single market is for Turkey so crucial. And we also can talk about visas. So we want to close the file of full enlargement, but we want to open the discussion about a real strong future relationship if Erdogan is ready for such substantial talks.
And we talk about substantial discussions between the European Union and Turkey. At this point, the EU does pay good money to Turkey to contain that flow of migration. Is that a relationship that needs to be revisited? The fact that we're paying to Erdogan at times, you know, that relationship does not seem easy, and we do see that he does use that as political leverage. Is it time to rethink, A, whether the strategy is working, and 2, pull away some of that funding?
The European Union and we as European Parliament, we are ready for a new start of the EU-Turkey agreement on migration. It was in the interest of both sides. So we financed as Europeans, for example, the education of the children in the camps in Turkey, and that was a positive investment. And Turkey benefited a lot with infrastructure money and so on. That's good for both sides. That's why we are ready. But again, it's only one piece of the general relationships between Turkey and the European Union. And the general question is, do we have a partner or do we have someone who is challenging us? And that has to be answered. If Europe is united, then we can be strong. And that is, again, what we want to see on Thursday when the Council will meet.
And I take it your views, just as final question on Turkey, joining the European Union potentially one day have not changed. You still believe it can be a partner, but not a member state.
Exactly. I think the last 10, 12 years, 15 years showed us that the approach to the Turkey can finally join the European Union was always a kind of an illusion. And that's why we have now a very difficult relationship. And that's why we think it's needed to make a general restart of the relationships. We are ready for partnership. We are ready for a good cooperation. But Erdogan has to show that he wants to do the same.
And the other big talking point is Belarus, what to do there. We know the European Union has said it believes the election was rigged, that Lukashenko did not win that election, and that there is going to be a list of sanctions that is going to be put forward at some time. We don't know when. But I have 2 questions with you on that. When do we get to see this list? And then 2, will Lukashenko be featured in it?
Lukashenko must be on this list. It's not understandable for ordinary citizens that we do such a list of sanctions against individuals, and the boss of everything is not on the list. So we have to do it. It's a question of credibility, and we have to see how strong and how firm and how convinced are the citizens of Belarus every weekend now out in the street fighting for democracy and freedom. And it's not only a question for the Belarusian people. It's also a geopolitical challenge for us, because 30 years ago, people went out in Dresden, in Warsaw, in Budapest, and fought for democracy and freedom. 12 years ago, it was Kiev in the Ukraine, and now it's Minsk. And people have the fundamental will and wish to achieve democracy and the free people, freedom for themselves. And that is what is at stake. And there Europe must be on the side of those who fight for democracy and freedom. It's our fundamental idea of being a European. And that's why the people in Belarus must see that we are on their side.
So you're clear on that Lukashenko has got to be on that list. If it's not, the European Union will lack credibility going forward.
Yes, exactly. And I would even go one step further, because for Belarusian development, the interference from Russia is crucial. Lukashenko gets already a lot of money from Putin, and probably we also see some activities from officials, from police, from even military side in Belarus, Russia. And that's why we have to send also a clear signal to Russia. And the signal must be, don't intervene in Belarus. We are not doing so as Europeans. It's a free will of people in Belarus to decide about their future. But we expect from Moscow to do the same. And that must be a clear signal. After the Navalny case, it's clear that the Russian system is heavily under pressure, and they have to fight against the inter-opposition in Russia as well. So our signal must be, don't intervene.
Well, Manfred Weber, head of the People's Party at the European Union, thank you so much for joining us here on Bloomberg TV. Of course, this is coming ahead of that crucial meeting that is happening between heads of states and European leaders later on this week in Brussels. Anna, Matt.
Maria, thanks very much. Bloomberg's Maria Tadeo with that really interesting interview there on the European sanctions story. 8:40 here in London, European equity markets sliding to the downside this morning. Up next, though, Sender buys Uber's European freight business as the Berlin-based startup continues its rapid expansion across Western Europe. We'll speak next with the CEO, David Northacker. That conversation is next. This is Bloomberg. Welcome back to the European Market Open, 43 minutes into Monday's trading session, and things look fairly bleak for European stocks, down by 1.7%. The FTSE 100 and the Xetra DAX and the IBEX all down by more than 2%, but other indexes not all that far behind. Let's talk about M&A in Europe right now. Uber is selling its European freight business in an all-stock transaction to the Berlin-based startup Sender. Bloomberg has learned that the deal values the unit at around $1.1 billion. Uber will acquire a minority stake in Sender. Joining us now is David Northacker, who is the CEO of Sender. Great to speak to you, David. So you've been doing a lot of deals. You've done deals in Spain and in France, and now this one for a business that's not that old. Are you concerned maybe you're taking on a bit too much, a bit too quickly?
Thank you, Anna. The acquisition of Uber Freight's European business is a major milestone in our growth and also an important part of to get to our objective of building the European road freight champion. This year, you mentioned it, we already had two big deals, the merger with our French competitor Everroad and a 100 million joint venture with Poste Italiane. This is part of our strategy of building up scale and volume to really leverage our technology to bring efficiencies in this very old school and inefficient industry.
Can I just ask about scale, because you have raised rounds for 16 million in 2017, 18 million a little bit later, and then you do the Uber deal, which is like $1 billion deal. How do you scale up that quickly, David? How do you manage to finance a deal like that?
It was definitely a very exciting year for us. I think that making sure to have the right processes and partnering up with the right teams to scale this quickly is one of the sources of our success. We anticipate that for the next year, we will also look into additional M&A transactions, this time probably not focusing on startups or young companies, but more established players where we can bring our technology into a setup where there's already significant scale so that we can optimize that as well.
How did the deal with Uber come about, David?
So from the beginning, we had the hypothesis that in road freight specifically, we will see continental champions, contrary to air and sea freight, where we will see global champions. And when comparing notes with Lior, the CEO and founder of Uber Freight, we realized that the best strategy forward in Europe would be to join forces and to team up, as this also allows us, through a cooperation agreement, to further develop technologies that are then applicable to both continents, as well as solutions for global shippers that operate both in North America and in Europe.
But you're focused on Europe, is that right, David, or do you have ambitions beyond the continent?
We focus on Europe. It's a 350 billion market, just the road freight segment, and there is a lot of inefficiencies and a lot of opportunities that we address. And I think the fact that we will focus also confirms the hypothesis that we had, that there will be continental champions with Uber Freight focusing then mostly on North America and we focusing on Europe.
I understand that margins can be quite low in this particular sector, David. Do you think M&A is one way that you drive those margins up?
Absolutely. The question is, how do we drive margins up? And if you look at our technology, we need a certain volume, we need a certain critical mass to be able to really optimize. I just want to give you one example. Load efficiency. What is the average utilization of trucks in Europe today? It's around 80%, 75 to 80%, meaning that 20 to 25% of all trucks drive completely empty. Now, throughout one of our technologies, we are able to combine loads of different shippers so that the average utilization increases. In order to do this efficiently, we need scale, we need a certain size. And this is why M&A is particularly attractive for us, because we can quickly scale, quickly reach this critical mass to truly optimize our network.
What about on the financing side, David? I thought it was interesting, the CEO of Snowflake, Frank Slootman, said after their hugely successful U.S. IPO, you know, this is a milestone for us. It's not an end point. And certainly, you know, they are taking advantage of that to raise funding for further growth. Can you see an IPO in your near-term future as a means to finance more growth?
Absolutely. We plan an IPO the next 3 to 4 years. Before that, we will most likely raise another round, our Series D. Thinking of doing this still this year, as the markets are currently very liquid. And from what we see, there's still a strong appetite for digital players that require funding.
All right. David, thanks very much. David Notehacker there, the CEO. at Sender, talking to us about the scaling, the incredible growth and scale of his logistics business. Now, take a look quickly at what's going on with bank shares, because we've been telling you about this FinSec report, and that may be one of the big reasons that you see these drops. Barclays down 6 1/3%, ING down more than 7% right now, Deutsche Bank off 5%, and as we've been telling you all morning as well, HSBC off 3.8%. HSBC falling down to the lowest level that we've seen it since 1995. So bank shares have been getting hit quite hard. Anna?
Yeah, and you add to that concerns around further lockdown measures in Europe, and things don't look great, do they? And European equity markets under pressure. We're looking here at live pictures of a panel. Our colleague Anne-Marie Hordern is currently moderating a panel for City Week, featuring the Man Group CEO Luke Ellis, Schroders CEO Peter Harrison, and Oxford University economics fellow and LSE Ideas Associate Linda Yu. Let's listen in for a moment.
Doctrine from the United States has just come out from the U.S. Fed chairman. That's already an indication we may well see new pronouncements in the UK, discussions of negative interest rates. We can talk a bit more about that. Obviously, other central banks have done it, and one has already stopped. But there's also fiscal policy uncertainty. So lots of countries are supporting the recovery. And I think this presents actually opportunities. So the money that's spent needs to support, essentially the main aim is to support employment, because the one way in which a negative shock
Welcome back to European Market Open. 54 minutes into a trading session that looks very negative. European equity markets, the major ones, all down by more than 2%. Joining us now is our Markets Live editor, Eddie van der Walt. Eddie, good morning to you. I mean, we've got this FinCEN story around the banking sector, and that seems to be having a big impact. Also, a lot of talk about lockdown measures, further lockdown measures. Is it these things you think are driving risk appetite and causing investors not to want to take any risk this morning? Some of these losses on risk assets, quite substantial.
Yeah, and I think we talked about this over the last few weeks, right? The pieces are in place for a substantial downbeat narrative, right? The bears have a lot of ammunition. They don't need a lot to latch onto. So I think when you see these down moves, you see all these stories sort of filter through the cracks, and people can latch on to them because there is still a lot to be worried about in the world economy, and particularly as you point out with the increase in infection rates in Europe.
What does that mean for copper prices? What does that mean for? I saw recently that jet fuel is so cheap that that shippers are using it on boats. Instead of their usual diesel. What does this mean for the world of commodities that you cover, Ed?
Yeah, the commodities world's really interesting at the moment. We are seeing commodities pulling in very different directions, and copper is the one that's standing out. It's the best performer. It's just not. It's still up today ever so slightly, even while oil and the others are falling. I think copper is slightly it's giving a false signal at the moment, and I think the reason for that is people are buying it on electrical demand. People are buying it on green demand, not so much on the immediate recovery.
Eddie, thanks very much for joining us. Eddie Vandervelt there from the Bloomberg MLive team. You can check out his work by typing MLIV Go. Anna?
Yep, European equity markets then on the back foot. Interesting talking about commodities there, Matt, with Eddie. I noticed that the ex-Goldman CEO, Lloyd Blankfein, was talking about how now might be the time. Probably a good time to invest in commodities was his view. A bleak picture for London, and that's just the weather. The stock market down by 2.6% here is in good company. Concern around lockdowns and the banking sector. This is Bloomberg.
Banks bruised. Leaked documents related to more than $2 trillion in transactions show banks kept profiting from powerful and dangerous actors even after the U.S. introduced penalties. HSBC shares sink. Lockdown 2.0. The UK will sound the alarm on rising infections today. The London mayor, Sadiq Khan, is set to recommend more restrictions. And with just 6 weeks to go until the U.S. election, the Supreme Court has emerged as a pivotal battle after the death of Liberal Justice Ruth Bader Ginsburg. Welcome to Bloomberg Surveillance, everyone. I'm Francine Lacqua here in London. Now, there's quite a lot going on in the markets, not withholding, of course, everything that's going on in the Supreme Court, and we're just about 46 or 45 days away from the important U.S. election. The picture on the market is, not great for banks. You can see, actually, the banks are down some 4.1%. If you look at some of the things that we should be watching out for, so European stocks are dropping for a third day. I'm concerned that rising virus cases will lead to tougher travel restrictions. I'm also looking at oil retreating and treasuries rising. Now let's get straight to the Bloomberg First Word News here in London is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Concerns are mounting that the UK may need a second lockdown to stop the spread of coronavirus. Prime Minister Boris Johnson is set to be told today that the nation is at a critical point in the pandemic. There are expectations that local restrictions could be extended to London. LBC is reporting Mayor Sadiq Khan will recommend tightening the rules today. Now, President Donald Trump is celebrating the TikTok deal despite it falling short on some of his key demands. The app's Chinese owners will still have an 80% stake in the new company, but the White House gets a U.S. headquarters for the business and the promise of new jobs. Sources have told Bloomberg that TikTok is seeking a valuation of $60 billion as part of the U.S. deal. And the European Central Bank is reportedly launching a review of its pandemic bond buying program. According to the Financial Times, it's looking at how long it should continue and if its flexibility should be extended to older programs. It was exempt from some of the ECB's self-imposed rules that constrained its original asset purchases. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, Ruth Bader Ginsburg, the 87-year-old Supreme Court justice, liberal icon and pop culture phenomenon, died Friday after a long battle with cancer. Justice Ginsburg's death places the Supreme Court front and center into the presidential race just 6 weeks before Election Day. Now, with voting already underway in some states, it could reshape the showdown between President Donald Trump and Democratic nominee Joe Biden. Well, Trump has said he will nominate a successor for Ginsburg, despite the Republican Senate refusing to consider Barack Obama's court pick 4 years ago.
Voters should pick the president, and the president should pick the justice for the Senate to consider. This was the position of the Republican Senate took in 2016 when there were almost 10 months to go before the election. That's the position the United States Senate must take today.
We will uphold equal justice under the law for citizens of every race, color, religion, and creed. I will be putting forth a nominee next week. It will be a woman.
Well, joining us now for all of this is Derek Walbank, who has covered Washington in the past. Derek, what have we learned since Friday about how likely it is that President Trump's Supreme Court pick will get confirmed, and why is it such a contentious issue?
Well, Francine, it looks like Mitch McConnell and Senate Republicans are going to move forward with a replacement, whoever Donald Trump nominates to replace Ruth Bader Ginsburg. It looks, I would imagine it to come off of some names who are currently in circulation. Donald Trump has done a very clear job of telegraphing the sorts of jurists he might pick, even including releasing names of people to say, here's my short list. So I don't think you'll see any sort of surprises in terms of who he's likely to pick. Now, it is likely to be somebody whose positions on most major issues are probably 180 degrees of what Ruth Bader Ginsburg would have done. You're going to talk about a 5-4 court split on some major issues becoming a 6-3 Republican majority, of 5 of whom you would have as probably very, very conservative. And so there is the potential to lock in a court for a generation that is very sympathetic to the Republican point of view on a lot of critical issues. And naturally, this has Democrats furious, especially because Merrick Garland, Barack Obama's nominee to replace the late Antonin Scalia, wasn't considered, wasn't given a hearing or anything like that in Obama's final year. Now, whatever your opinions on the differentiations between how those two situations are treated, the simple fact of the matter is that Republicans, if they feel like they have the votes, are going to go put this person on the Supreme Court.
What would you be watching for under a 6-3 Republican-nominated high court?
Well, I think that a lot of people are going to talk about social issues straight off. They're going to talk about Roe v. Wade, which is the decision that sort of underpins abortion rights in the United States. But one of the things I'm watching is on regulations, federal regulations, specifically the scope of regulations. Republicans have been trying for a long time, people who have been searching for conservative jurists have been trying to narrow the scope of federal regulation when it's not explicitly stated in text. This is something you're going to hear on the news a lot as the Chevron deference. It's a complicated situation, but basically it means the scope of federal rulemaking ability related to old statutes. So you're looking at somebody who could really narrow that, who could really narrow the scope of federal regulation. That shows up in a lot of ways. That shows up in environmental regulation. That shows up in the scope of regulations otherwise, such as Obamacare, such as health care, such as, anything like that. The scope of what Congress is able to do. Now, I would expect, though, Democrats will not take all of this lying down. There is a real chance that they could win the presidency. If anything, Joe Biden's favored as of right now. There's also a real chance they could pick up the Senate. That's more of a coin flip right at this moment. But if Democrats win the Senate, if Democrats take the White House, they're talking about, look, if you're not going to consider our court picks fairly and they feel like they've lost 2 seats, expect some real movement from Democrats in terms of considering expanding the size of the Supreme Court, maybe moving forward on statehood for the District of Columbia or for Puerto Rico or some other major measures. I don't expect Democrats to sit down on this. And the last thing I'd say, Francine, is this. You've seen $100 million pour into Democratic coffers in the days since Ruth Bader Ginsburg passed away. There is a real urgency on the Democratic side to do things. And it's just as the Supreme Court motivated conservatives to support Trump, even if they didn't really like him as their #1 option in 2016. In 2020, you're seeing progressives like AOC go out and put out videos saying, look, this is existential. We need Joe Biden right now. So if anything, this has energized Democrats who might have been skeptical about Biden, who are now sitting there saying, look, choice couldn't be clearer, could it?
All right, Derek, thanks so much. Derek Wellbank there with the very latest, of course, of what happened in U.S. politics over the weekend. Now let's talk about the election and what it means for the markets. Joining us this morning is Mike Bell, global market strategist for EMEA at JP Morgan Asset Management. Mike, as always, thank you so much for joining. I mean, the election may now hinge on what happens with the, U.S. Supreme Court picking. What does it mean for the markets?
I think in my mind, the key thing is that there's been a lot of commentary around how a Biden win could lead to higher corporate taxes. But the key issue for the U.S. economy is the fact that we've seen the fiscal stimulus ebbing. So actually, were we to see a Democrat clean sweep where Biden won the presidency and the Democrats take the Senate and the House, then I think the more important factor for markets would be the significant fiscal stimulus that you'd be likely to see in that scenario, rather than the potential for corporate tax rises coming through later. And I should say, I think if you got a Republican sweep as well, and so the Republicans taking the presidency and keeping the Senate, then you'd probably still see fiscal stimulus. So in my mind, the most important thing for the market is that we don't end up with a divided Senate. Or a situation at least where the Republican Senate is blocking further fiscal stimulus potentially if we had Biden as president.
But Mike, at the moment, what is the market pricing in? And actually, do you trust the polls or do you expect them to narrow even further?
I think the market is aware that it's going to be a pretty close race. But I think the market is probably going, if you look at the betting odds at the moment from a site like Predictit, it suggests that the most likely outcome at the moment is that you're going to get a tie in the Senate, and that therefore whoever wins the election for the presidency is going to have a deciding vote. And so I think that's what the market's probably pricing in as the base case, which if the election were held today and those predicted odds are correct, would imply Biden as president with a Democrat control of the Senate and House. And I think it's because the market is starting to move to a view that the fiscal stimulus would trump any potential increase in taxes on the corporate side in terms of the impact on the economy, that hasn't proved problematic in terms of the market over the last few weeks or months.
What happens to dollar?
I think that there's a lot of factors there, right? The dollar tends to perform relatively well in a sort of risk-off environment. So if we see a vaccine and we see a Democrat sweep with big fiscal stimulus, then I think you'd probably see downward pressure on the dollar. But if we don't get a vaccine and we get trouble around a winter wave of infections, as we're seeing in Europe and the UK at the moment, and that leads people to question the narrative that we're going to see a continued economic recovery from here, then in that scenario, the dollar could hold up better.
All right, Mike, thank you so much. Mike Bell there from JP Morgan Asset Management stays with us. Now, coming up, a critical point in the coronavirus pandemic. The UK's chief medical officer warns infection data are heading in the wrong direction, while London's mayor calls for more restrictions, and we'll discuss that next. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, we're just getting a bit of headline news out of the markets. If you look at the European Stock 600, that index has fallen today 2.1%. That's the most since July 30th. Now, European stocks are dropping on concern that rising virus cases will lead to tougher travel restrictions. I'm also looking at oil retreating, treasuries actually rising. Now, to talk more about the markets, a possible second lockdown, a possible travel restriction increase, let's get back to Mike Bell from JP Morgan Asset Management. Mike, what exactly is the market looking at right now? Part of it is, of course, the number of infections rising. Is the market afraid of a second full lockdown? And is anything short of a second full lockdown going to be positive news for the markets?
I think that's definitely the market's concern. What you've seen over the last few months is investors have been operating under the assumption that we wouldn't see a return to further lockdowns and that it would be dealt with at a pretty local level and with less severe measures than we've seen in the past. So it's not just the infection data, which has obviously been picking up in the UK, but also in parts of Europe, particularly France and Spain. But the market until recently, I think, had been focused on the idea that while hospitalizations and the number of deaths remain low, that was therefore unlikely to turn into further lockdown measures. But the news we're seeing coming out of the UK over the weekend that actually potentially there is a risk of more severe lockdown measures being put in place, I think is causing investors to question that narrative and increase fears that this could be a difficult autumn and winter.
Mike, overall, what do you do with UK assets? So we also have that looming deadline for Brexit. As far as we know, although there was a glimmer of hope last week with the Commission President saying that there's still time or there's still hope for a deal, what do you do with assets right now in the UK?
I think my first point would be that I'd be cautious about being overweight the domestic UK revenues. But of course, the FTSE 100 actually gets the majority of its revenues from outside of the UK. Now, some of those non-UK revenues would clearly still be exposed to Brexit in the form of European revenues. But still, more than half of the revenues in the FTSE 100 come from outside of the UK or Europe. So looking at places like the emerging markets and the US as the source of a large part of UK revenues. So I would be tilted more towards those international ex-UK, ex-Europe revenues as a way of minimizing that exposure to a potential no-deal Brexit fallout, or indeed the hit, which I think could come through if we don't see an extension to the furlough scheme. Because the risks going forward, in my mind, are twofold. Firstly, that we see another hit to the economy from the virus and potential lockdown measures. But even without that, if the furlough scheme were to end as currently scheduled, then I think you'd see a hit as the incomes that have been propped up so far fall suddenly as many of the people currently furloughed become unemployed.
When do we start worrying about inflation, if we ever start worrying about inflation?
Personally, I think there's going to be a potential temporary pickup in inflation just because of the base effects, the year-on-year effects at some point in the next 12 months. But looking out on a more medium-term view, I think that inflation is only a concern if unemployment is kept low. So were we to get through this COVID disruption with the unemployment rate having been kept at a low level because of further fiscal support and extension of the furlough scheme, for example, then once we get a vaccine, you could see a big snapback in demand, and that could lead to a pickup in inflation because the unemployment rate would still be low. But if unemployment is allowed to rise substantially because fiscal stimulus is withdrawn too soon, and therefore we get a big pickup in unemployment, then I think it's going to take several years for us to have to worry about inflation because the unemployment rate is going to take some time to come back down.
Mike, in this kind of environment, what do you do with gold?
I think gold's fascinating because I've been quite bullish on gold the last couple of years, and it's obviously had quite a strong period of performance, but it's been driven by declining real yields. So that decline in real yields has come in two phases. The first part was as nominal yields fell. The second part was as inflation expectations rose. So from here, I think gold works as a hedge against further monetization of fiscal deficits, which would keep government nominal yields low, but lead to a further rise in inflation expectations. But I think it's absolutely crucial for investors to understand that if inflation expectations fall from here, then that could actually prove negative for gold because it would put upward pressure on real yields. And hence, fundamentally, the correlation of equity markets with gold has probably risen as we've shifted into this phase of real yields being driven by inflation expectations.
Mike, thanks so much. Mike Belder, Global Market Strategist for EMEA at JP Morgan Asset Management. Now, coming up, leaked documents reveal how some of the world's biggest banks have allowed criminals to move dirty money around the world. We discuss that next with the FinCEN files. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, if you look at the European stocks 600, the index actually down. If you look at what exactly we've been seeing, it's down some 2.7%. That's the most since earlier this summer. I'm also looking at U.S. 30-year Treasuries rallying. That yield is at 1.40, and it's something that we need to keep an eye on. So mainly the market seems to be in a risk-off mood, partly to do with the banking story we'll get onto in a second, partly also due with what's been happening with infection rates, and they worry about a possible second lockdown. Now, leaked documents involving about $2 trillion of transactions reveal how some of the world's biggest banks have allowed criminals to move dirty money around the world. Well, Bloomberg's Danny Berger has the details on the so-called FinCEN files. Danny, good morning to you. What do we actually know about them?
Good morning, Francine. So these files obtained by BuzzFeed News and shared with the International Consortium of Investigative Reporters. So they're called the FinCEN files because lenders file these suspicious activity reports to the Financial Crimes Enforcement Network, hence FinCEN. And these will be reports on anything that looks suspicious, anything that might indicate money laundering or any other sort of financial crime. So they're everything from profits from deadly drug wars, embezzled fortunes from developing countries, enablement of Ponzi schemes. So anything that looks suspicious, $2 trillion worth, BuzzFeed was able to see. And they have been shielded from the public eye. This is the first we're really learning of the details within them. Now, the issue here isn't necessarily that these exist, that banks filed them. The concern is over what action happens after they're filed. According to this report, often not a lot of actions are taken. Yes, some of these reports are shared with crime enforcement networks. However, in terms of stopping the money laundering itself, that's the reaction that is not exactly seen. Some of the details in here: Standard Chartered accused of moving money on behalf of the Al Zroni exchange, which is a Dubai-based business that was later accused of helping launder money for the Taliban. HSBC's Hong Kong branch transferring about $15 million, allowing a Ponzi scheme to happen. So some of those explosive reports, a real concern about what action is taken afterwards, Francine.
Thanks so much. Our Danny Berger there was the very latest, of course, on the news that's really rocking some of the banks. Now, this is what European banking stocks are doing. They're down. If we bring the board up, one of the biggest losers in terms of the industries is, of course, the banks. This is what we're seeing on the FTSE 100, down some 2.7%. The DAX also down some 2.5%. A lot of the focus, of course, is on this possible second lockdown, or there are signs that London is heading for a second lockdown. I'm also looking at U.S. equity futures. They're down. Treasuries are rising. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
This is Bloomberg surveillance. European stocks are actually falling the most since early summer. Now, this is what we're seeing across the board. If you look at the European stock 600, they're down some 2.1%. We're also looking at U.S. equity futures. They're sinking, and treasuries are rising. The FTSE down some 2.8%. It really is led by airlines and travel companies. Those are leading the losses in the European stock 600. Part of it, of course, is as concern about a second lockdown. And then I'm also looking at some of the banking stocks. HSBC falling to the lowest since 1995. European shares of banks also down following a story by the International Consortium of Investigative Journalists on lapses in suspicious activity reports. We'll have plenty more on the markets, but now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Concerns are mounting that the UK may need a second lockdown to stop the spread of coronavirus. Prime Minister Boris Johnson is set to be told today that the nation is at a critical point in the pandemic. There are expectations that local restrictions could be extended to London. LBC is reporting Mayor Sadiq Khan will recommend tightening the rules today. U.S. Secretary of State Mike Pompeo is hitting out at Europe for supporting what he calls the silly Iran deal. He says governments have privately told him that the U.S. is right, even if they won't publicly acknowledge it. The U.S. plans to tighten restrictions on Iran, what it calls a snapback of sanctions on the country. And China is ratcheting up tensions in the Taiwan Strait, hoping to deter Taipei from deeper ties with the U.S. In a series of military exercises, China repeatedly breached the median line separating the two countries. Beijing regards the island as part of its territory, even though it's been ruled separately for more than 70 years. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. We're just getting some breaking news out of Unilever. This is the Dutch shareholders are set to approve a combination of the headquarters. Remember, there was a talk, of course, about moving the headquarters. That got a little bit of pushback. It seems that now that the Dutch shareholders, who I believe were just put to a vote, are all on board. We understand that they're set to approve this headquarter combination. Now let's get back to the U.S. We're 42 days away from the election, and early voting is already underway in several states. The death of liberal Justice Ruth Bader Ginsburg may reshape the campaigns of both President Trump and his opponent, Joe Biden. Well, joining us now is Stephanie Kelly, senior political economist at Aberdeen Standard Investment. Stephanie, great to have you on the program this morning. I mean, this is huge. This could this actually reshape the election campaigns?
I think it certainly could, particularly if we look at this election campaign over the past few months and how incredibly stable it's been, remarkably so. We've been kind of wondering what would come in that might shake things up. And in particular, I mean, how it bears out on polling, we can talk a little bit about that. I think that's more mixed. But how it plays out in terms of President Trump's election strategy, I think is now very clear. He's likely to have this front and center as a win, particularly for more conservative voters in terms of trying to motivate, his very large white voter base, particularly the white evangelical voter base.
Stephanie, what does this mean for the undecided? Does it actually, change the minds of people that didn't know who to vote for?
It's kind of tricky in that regard, because if we look to 2018, where we saw another justice confirmed to, huge uproar on the Democratic side, I think the reaction in polling was mixed. And when we look at midterm results, red states, the Republicans did well in red states, the Democrats did well in blue states. So it's harder to kind of draw a firm conclusion about how this really plays, particularly with kind of swing voters in the middle who aren't over ideological either way, not overly conservative, not overly liberal. That's where I think the big question mark is going to be, and what everyone's been watching really closely in the polls, because we know levels of certainty were already quite high with voters who said they were going to vote. They felt certain of who they were going to vote for. And so this really is a margin game. Everything for the next 4 weeks is going to be about just eking out at the margins, trying to reach these swing voters who are notoriously hard to pin down in terms of their own beliefs.
Will this, Stephanie, actually narrow the polls going forward?
I mean, it could. This is, again, I'm slightly inclined to pause in terms of saying it absolutely will or it absolutely won't. The reality is that for Trump and for the Republicans writ large, this is a huge win, especially longer term, even election aside. However, the Democrats are very, very unhappy about this, and Democratic voters, and indeed maybe kind of relatively liberal swing voters, are also likely to be unhappy with the way that this is being done, particularly because back in 2016, Obama's nomination for the Supreme Court couldn't even get a hearing in the Senate because the Republicans said that it was the wrong time and you needed to have a new president in place. Now the shoe's on the other foot. But the Republicans have the White House and the Senate, so they're moving forward quickly. So it could create a lot of backlash, actually, with Democratic voters or Democratic sympathetic voters. And that's why I'm not minded to say there's a huge impact. But certainly, you know, if there was ever an event to bring some volatility into those very stable polls, this is probably it.
Stephanie, I also want to ask you about the UK. We're looking at a possible second lockdown, possibly for London. Does this change the narrative at all of Brexit? Is there basically a turning point where, you know, if we go in lockdown, then the Prime Minister can afford to go much harder on Brexit because he wants that to be his legacy?
So I think it's actually trickier to say that it necessarily is going to make him want to go harder on Brexit. If anything, the fact that you're facing potential, partial lockdowns in many parts of the country, potential tightening of some of the restrictions across England, Scotland, Wales, and Northern Ireland, all of that is actually potentially quite problematic for Johnson, and maybe, against such a challenging economic backdrop, against a very challenging health backdrop, having a no-deal Brexit is just another factor that would look like, or could be perceived as, and definitely spun by opposition parties as another quote-unquote failure by the Conservative Party. So although it does play to a couple of kind of, a couple of parts of the voter base, the reality is that no one's talking about extensions here. It really is just about, do you get a deal or do you not get a deal? And most voters still believe in getting a deal.
Stephanie, we're kind of jumping around because I want to bring you, all the big stories from around the world. So what's your take on TikTok? President Trump kind of gave it its blessing. Is now a done deal, or are we going to see the U.S. administration going after similar companies?
Well, I think that's the kind of message, and not just on TikTok and not just U.S. behavior, but also we saw, over the weekend by China in terms of the entities list that they've released. So really, I think what we should expect and continue to expect is acceleration of that non-tariff, trade war that is going on. As investors, we get very caught up in whether, what rate is the tariff and will it go up and will it go down? The reality is that these kinds of moves really politicize the trade agenda, politicize business decisions, and create long-term barriers between the two countries that I think are only likely to escalate. Even under a Biden administration, it may be slightly less politicized, but you'd see that continued pressure to continue to, eke out non-tariff barriers such that the two economies really end up, going on different tracks.
All right, Stephanie, thanks so much. Stephanie Kelly from Aberdeen Standard Investments stays with us. In the meantime, we're seeing a bit of a sell-off in European markets that's extending to U.S. futures. So let's bring you what the markets are looking at. If you look at the industries that are down the most, we have industries, we have airlines, and we also have banks. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A global crackdown on banks doesn't seem to have curbed suspicious activity. Leaked documents tied to more than $2 trillion of transactions show some lenders continue to profit even after the U.S. imposed penalties on them. The so-called FinCEN files were released over the weekend by a consortium of investigative journalists after being obtained by BuzzFeed News. Now, the founder of electric vehicle company Nikola is stepping down as chairman. That's as the company finds itself in the crosshairs of a short seller who says it deceived investors about its prospects. Those claims are now subject to a probe by the SEC and reportedly also the Department of Justice. And a whistleblower at Boeing is urging aviation regulators to add additional protections to the grounded 737 MAX. He says the proposed fixes don't address multiple hazards identified in the two fatal accidents. The FAA now has to review more than 160 comments that have been filed before deciding whether to approve the plane's return to service. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Let's get more on this morning's market action. European stocks deep in the red today, dropping the most since July. That's after a report on bank allegations and signs that London is heading for a second lockdown. Well, U.S. Treasuries getting in the risk-off mood. Danny Berger has the latest. Danny, what are the markets so worried about?
Francine, it's definitely this narrative of markets and traders waking up to the reality that here on the Northern Hemisphere, as we start to enter the winter, cases of coronavirus are not going to get much better. Of course, as you mentioned, concerns of another lockdown in London and broadly across the UK, which would hurt the economy a lot. And then you add into this the latest report from the ICIJ, the International Consortium of Investigative Journalists, and BuzzFeed over concerns at banks enabling various money laundering schemes. But besides that, this is historically a bearish period. The next 20 days after September 25th, it's the most difficult time for traders to turn a profit historically. That stat according to Stephen Inez at AXI Investments. And then you also head into a period where you have the U.S. election, and hedging increases for that in the increased volatility. All of that to say that when we get any sort of increases, when you get any sort of gain in stocks, what we're seeing more often than not is that start to fade. So the losses really ramped up when Europe came into line. And the question is going to be, as more U.S. traders come onto the line, is the buy the dip sort of mentality, could that possibly win out? But as I mentioned, there's just a really a solid bearish scenario and argument you could make with all these risks. And I think that's just really helping to see all of these sectors and indeed the wider market just continue to drift down this morning.
Danny, thanks so much. Our Danny Berger there with the very latest on the markets. Now, Brian Moynihan, Chairman and Chief Executive of Bank of America, told Bloomberg in an exclusive interview that there should be another round of federal stimulus to help the U.S. reach a full economic recovery from the coronavirus pandemic. Well, we caught up with him ahead of this week's Bloomberg Equality Summit.
Our basic belief, our research team, is that the United States will be down 4% for the year. And then next year will be up 5% or so. But the key is to think about it quarter by quarter. You had a deep drop in the economy last quarter. You're back up to where 95% of the economy is back, basically restored on a quarterly basis. And then we're going to work out from there. But behind that was a 1 to 2% growth economy. So the idea of it recovering that last 5 percentage points, tomorrow morning, it's going to take a while to grind through that. Now, the reality is every estimate, including you heard from Chair Powell yesterday, has gotten better rather than worse. And why is that? That's because consumer activity stays strong. So the fiscal stimulus, the monetary stimulus, the programs the Fed had, between the government administration, Congress, between what the Fed did, they basically, filled the hole, for lack of a better term, to bring the economy back up to level. And now we got to let it work out from there. And they probably need more stimulus for very defined places that are still in difficulty: restaurants, state and local governments, schools, performing events venues, some of the industries, airlines, and other things that you just can't have people do at the rate we had before. But the rest of the businesses, the dentist's office is back busier than they've ever been. So what do we see? Consumer spending is up year over year. That's up year over year, and that's good news. And so we're seeing it start to grow finally. It was growing at 10%. It fell. and it's worked us all the ways back to even, and we'll see it probably start growing year over year. We're seeing it grow year over year so far in September. We'll see how we end up. So that's good news for the economy, meaning that amount of activity that goes on in our economy is restored.
Brian, you said it. Chair Powell said we're better off right now than we thought we would be at this point. But he also said there's a lot of uncertainty out there. And I'll name three of them. You mentioned one, fiscal stimulus, further fiscal stimulus. How badly do we need that? We have an election coming up. And by the way, there's the coronavirus. We don't really know about a vaccine.
And I think this is a healthcare crisis, and I said it back in March, and I said it even with you a few months ago in our interview. People can't forget that this is a healthcare crisis, and so what's happened over the last 6 months in the healthcare crisis, it's gone on longer than that, is you're seeing the potential for a vaccine, but importantly, you're seeing better just behavior to keep the thing from spreading as fast. So as we're seeing it in the Northeast, for example, you've seen it crest over, and the infection rates are much, much different than they were early on. And you're seeing that the infection rates fall off. That's good news. And you're seeing the treatment regimens being different. And you're also seeing, because of the personal behavior, the people higher risk staying even more careful, the impact of the virus is still hugely hurtful to the people who get it, but not as bad outcomes. And so that's all good news as we wait for the vaccine, which is sometime out there over the next several months, and that would be good news. But until that's in everybody's arm, you're still going to have the drag of, will people go back to their behavior before? So that's the one thing. It's a healthcare crisis, and that's solved. What we need, I think, is pretty straightforward. You need more stimulus for the people. If you think about the analogy, we're all on one side of the river, and we all had to cross the river. We all needed a bridge. And so a lot of people are across the river. Certain segments of the economy, that are even doing better than they did before the crisis. Other segments are doing just fine. Take the medical industry is wholly back to normal now because the hospital capacity doesn't need to be held aside for the virus treatment. The housing industry is strong. The construction industry is strong. So those are across the river, so just let them go. Where you need help is restaurants and things like that. And so the next round of stimulus ought to be focused again on the areas that need the most help. And so PPP, the next round, should there be a second bite at the apple? I think so for the certain companies, because this went on longer than we thought it was going to go on.
Well, that was Brian Moynihan, the chairman and chief executive of Bank of America, speaking exclusively to Bloomberg ahead of the Equality Summit. You can also tune into our equality coverage right here on Bloomberg TV on Wednesday, the 23rd of September from midday UK time. Now, we're seeing quite a big sell-off in European stocks. That's along with U.S. futures. If you look at European stocks, are having a bit of a meltdown with U.S. futures, travel and leisure, and also banks are the two culprits that will keep weighing on the stock 600 in the short term. That's according to some of our equity specialists. If you look at, some of the concerns out there, of course, it's coronavirus. You can see that a rising wave of virus cases is hitting airlines and hotels. UK leisure stocks also particularly being hit amid fears of a second lockdown that may be needed. But beside those concerns, banks are also being pressured amid a story by the International Consortium of Investigative Journalists on lapses in suspicious activity. This is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
European stocks deep in the red today, dropping the most since July, while S&P futures extending losses, now down some 2%. You can take a look at the GRR function on the Bloomberg, and you can see which European sectors are down the most. All 19 industry groups trading lower this morning. Travel and leisure stocks plunging more than 5%, with banks, insurers, and car makers also getting hit quite hard. Now, if you look at UK assets, they're also amongst Europe's worst performers today. No wonder when rising viruses cases rekindle talk of lockdowns that would cripple recovery efforts, and that's kind of what we're seeing on the market. Still with us, Stephanie Kelly from Aberdeen Standard Investments. Stephanie, thank you so much for staying with us. When you look at the market fears, how much does it have to do with banks, and how much does it simply have to do with a potential second lockdown?
I think naturally, given the amount of media coverage this morning, in particular of lockdown fears and COVID more broadly, that's one of quite a few things contributing. I do think there's nervousness more broadly around the outlook for fiscal stimulus, particularly in the US, against the backdrop of what happened over the weekend with the death of Justice Ginsburg. And then as well, you have these kind of pockets of bad news. And I think overall it's making for a pretty gloomy Monday.
Stephanie, what will the market take their cue on in the next couple of days? Is it lockdowns? Is it some of the stuff surrounding the banks?
So I think, it's always tricky to call, and I think one thing we need to be mindful of from the investment perspective is also around the push-pull that we've seen with some bad news through this crisis, and in particular, when we have higher coronavirus crisis, particularly in the UK, for example, that is also an environment in which then people might start to get a bit more bullish about a vaccine being approved more quickly because you have more cases, therefore there's more vaccine around, therefore they have a better chance of those being tested actually, being exposed to the virus, etc. We know that's been an issue, for example, for the Oxford case. And then in the UK as well, if we look to fiscal stimulus, there's been clear signaling from the UK government that they want to avoid a national lockdown, which is, from an economic perspective, encouraging, but also that they've wanted to kind of roll back on things like the furlough scheme. If there is genuine push for a much more expansive, restriction, maybe not full lockdown, but restriction of activity, particularly for certain sectors, that's probably an environment in which, the Chancellor is under much more pressure to provide some comfort and some support there. And so maybe some of those fears about fiscal might also come down a little bit.
Stephanie, if you look at what's happening with travel and leisure stocks, they're severely under pressure. Can they actually impact the rest of the market towards, December? Is this one of what we call the scarring things, and will that ever recover?
Well, that's one of the hard things for the travel and leisure sector is that it's hard, if you've got a holiday booked and it gets cancelled because, they're not allowed to host you, you can't make that back. You can't go on that holiday again, or you're not going to go twice necessarily. So I think that's one of the challenges that sector in particular faces, is that it's one of those parts of the economy where it's really hard to recreate or to rebuild what's lost. Now, that being said, longer term, if you look at the outlook for the sector, it's going to be much more driven by things like consumer demand and consumer tastes. I think particularly if you think about the short term versus the long term, yes, going into winter, not the most obvious time for travel and leisure anyway. Obviously, through the summer, there was a bit of a boost that there was a reopening at the right time for that sector. But going forward, it is just naturally the place where it gets squeezed, particularly because many governments, the UK government in particular, really pushing for this idea that, the schools need to stay open and other things really have to take the hit as a result, which is, economically long term, probably quite tall, but hard for that sector.
Thank you so much for your time. Stephanie Kelly there, Senior Political Economist at Aberdeen Standard Investments. Now, as we head to break, let's look at the markets. European stocks deep in the red, dropping the most since July. S&P futures extending losses, now down some 2%. U.S. 30-year bonds gaining risk-off mood, of course, taking hold. And if you take a look at the GRR function on the Bloomberg, you can also see which European sectors are down the most. Now, all 19 groups are lower this morning. Travel and leisure stocks plunging more than 5%. The focus is also on some of the fixed income. Bunds and BTPs are likely to gain in the future after the ECB is also reportedly reviewing some of PEP. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York, and later a conversation with Robert Kaplan. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Banks bruised. Leaked documents related to more than $2 trillion in transactions show banks kept profiting from powerful and dangerous actors even after the U.S. introduced penalties. HSBC shares sink. Lockdown 2.0. The UK will sound the alarm on rising infections today. London Mayor Sadiq Khan is set to recommend more restrictions. And with just 6 weeks to go until the U.S. election, the Supreme Court has emerged as a pivotal battle after the death of liberal Justice Ruth Bader Ginsburg. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lack in London, Tom Keene in New York. Tom, I'm looking at the markets, and actually we'll do extra market and data checks every 15 minutes because it's an absolute bloodbath. Certainly when it comes to European stocks, they're falling the most since July. I think some of the industries are down some 5%. I'm looking at travel and leisure, especially in the UK, on the back of possible new announcements of lockdown measures.
Yeah, without question, the set of issues leading to where we are, the Dow down 582 points, down over 600 points recently. We're not near a correction yet on S&P, but we're really getting there rapidly, Francine. As you mentioned, and I don't think this can be underplayed, the virus, the pandemic is really front and center on a global basis, even within America, distracted by an historic moment.
Yeah, and actually a historic moment that could possibly sway the election. We'll delve into that a bit deeper. Let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. The death of Justice Ruth Bader Ginsburg has thrust the Supreme Court into the political spotlight. Republican leaders in the Senate are hoping to rush through a replacement, with President Donald Trump expected to nominate his pick this week. But Democrats are warning of a constitutional crisis if Joe Biden wins the election, but Trump's candidate is still confirmed to the Supreme Court. President Trump is celebrating the TikTok deal despite it falling short on some of his key demands. The app's Chinese owner will still have 80% in the company. The White House gets U.S. quarters for the business and the promise of new jobs. Sources have told Bloomberg that TikTok is seeking a valuation of $60 billion as part of the U.S. deal. And concerns are mounting that the UK may need a second lockdown to stop the spread of coronavirus. Prime Minister Boris Johnson is set to be told today that the nation is at a critical point in the pandemic. There are exceptions that local restrictions could be extended to London. LBC is reporting that Mayor Sadiq Khan will recommend tightening the rules today. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Let's look at the data right now, and it's very, very difficult. There's been a real deterioration in the last 20 minutes. S&P futures negative 61, Dow futures negative 579 as well. You see it with the VIX really up, amazing, 4 big figures, 4.42 on the VIX, 30.25, and that is not a good statistic. We've got substantial correlation across bonds with curve flattening down to 52.54 on the 2-10 spread. I really want to point out, Francine, yen 104.17 really gets my attention. A good 8, 9, 10 days of yen strength here, not to some breakout, but nevertheless, dollar yen showing some significant safe haven action.
Yeah, I'm looking at European stocks, Tom, so they're falling the most since July, but actually if you look at travel and airline companies, they're leading the losses on the European stock 600. They're down some 5%. This is on, of course, worries about a potential second lockdown or further restrictions being put in place. And then European banking shares are also dropping. HSBC, the lowest since 1995 in terms of how that share price is trading. And this is after a story by the International Consortium of Investigative Journalists, showed some lapses in suspicious activity reports, and it's very clear that actually treasuries are rising. There's a risk-off mood out there. Now, Ruth Bader Ginsburg, the 87-year-old Supreme Court Justice, liberal icon and pop culture phenomenon, died Friday after a long battle with cancer. Justice Ginsburg's death places the Supreme Court front and center into the presidential race just 6 weeks before the election day. Well, Trump has said he will nominate a successor for Ginsburg.
I think we're going to start the process extremely soon, and we'll have a nominee very soon. I could see most likely it would be a woman. Yeah, I think I can say that. It would be a woman. I would, if somebody were to ask me now, I would say that a woman would be in first place, yes. The choice of a woman, I would say, would certainly be appropriate.
Now, for more, we're joined by Peter Trubowitz. He's LSE Professor of International Relations. Professor, thank you for joining us. Can this actually change the election outcome, or does it reinforce already existing trends?
I think it's actually going to probably more reinforce. I don't think it's going to be a game changer. There was a poll over the weekend A Reuters poll, 62% of Americans think the vacancy on the court should be filled by the winner of the November election. And in fact, what's interesting about that poll is it includes 50% of Republicans. Predictive markets, if you're looking at those, I know you're focused on the stock market, but the predictive markets really haven't changed. If anything, they're moving in Biden's favor. What I would say is that what this does for Trump is it does change the conversation. It moves it more away from his mismanagement of the pandemic and the economy. It will fire up the Republican base in some key Senate elections, but it will also fire up the Democratic base. And we saw that over the weekend with the huge haul by Act Blue, the Democratic fundraising organization. So, I mean, I think kind of heading into the home stretch here, we can expect Trump to play this card because, frankly, it's the best card he's got in a pretty lousy hand.
But does it sway the undecided voter at all, Peter, or not?
Well, you know, I mean, there was another poll, a Wall Street Journal poll, an NBC poll over the weekend. 90% of Americans have made up their minds. Nothing's going to change it, they say, including the debates, like if the Biden failed in the debate or Trump. That does leave 10%. There is possibility of some movement there. So, you know, but it is just not obvious how this cuts. I mean, if you're in, you know, Susan Collins in Maine, this having to vote on this before the election does not help you at all, and that's true in a number of other campaigns. It's, you know, I think it's a little too easy to say that this is going to help Trump with undecided voters. I think what it does is it helps him with his base. And given that his base, you know, the worry is that some of those people are just not going to vote. I think, you know, you could say that on balance, it helps him there. But in terms of the undecided voters, I think it's a crapshoot.
Peter, good morning. Thrilled that you're with us to start my coverage here with Ruth Bader Ginsburg and where we're going afterwards. Peter Trubowitz, I want to go back to Austin, Texas, and your study of government. One of the great moments in Supreme Court history was Ike having to pick William Brennan because he needed the Catholic vote in the Northeast. I'm guessing 1956. Does President Trump need to pick the gentlelady from Florida simply to garner a Florida edge on this election?
No, I'd go with the Catholic lady if I were him because he's already got the Cuban vote. You know, I mean, it's a great question, Tom, and if you're playing the politics of it, you know, it is close in Florida, but Biden is having a lot of trouble with Hispanic voters in Florida, and especially with Cuba. And I think that, you know, Trump has got to find one of these big industrial states that he is going to poll. Right now, Michigan is starting to look like it's out of reach. Wisconsin's a problem. Maybe Pennsylvania.
Yeah.
You know, so. I think, you know, to answer your question, it's not obvious going with the gentlewoman from Florida is the right move.
It's really interesting, folks, to see how this lines up in the coming days as well. What will the hearings be like if we select the professor from the University of Notre Dame? Fine. What do you think those hearings will be like? She's been hugely vetted, right?
I think there'll be a mess, and we don't know. What we know is that Trump, he's saying he's going to pick a nominee this week, and he wants this to go, you know, have a vote before the election, a confirmation hearings and a confirmation vote before the election. It is McConnell has kept his powder dry on this. He has not said when he's going to do it, and it may be that for McConnell, it makes more sense to put this off until after the election. His interests do not necessarily line up with Trump. Trump needs the added insurance if they've got any contested election result here, that you've got another conservative justice. McConnell wants to hold on to the Senate. If he pushes this thing and he, and runs the risk of losing Senate seats, I think he holds off until after the election. Of course, if Trump loses the election, it makes it even more complicated to try to push this thing through, afterwards. But if there are hearings, they will be incredibly contested, and the gentlewoman from Notre Dame will be in the hot seat and will be pressed very, very hard.
Peter, we're looking at the markets, and part of it is of course because of new restrictions. Some people take issue with the fact that we call it even a lockdown here in Europe and things like that. But how will President Trump be actually judged on Election Day on COVID-19? It's still 48 days away. Do people tend to remember the last couple of months, or do they have a long memory?
Personally, I think that still remains the big structural impediment for him. We're going to hit either today or tomorrow. It's going to be 200,000 Americans that have died. And in some ways, this Supreme Court pick provides Biden with an opportunity, because the smart move right now for a Democrat is to connect the Supreme Court decision to health care. And I think that's what we're going to see. He kind of pointed in that direction yesterday in that speech in Philadelphia. Nancy Pelosi is already talking about it. There are in these battleground states like Arizona, Florida, North Carolina, there are a lot of retirees who are worried about health care. And what he needs to do, Biden, and what I think he will do, is remind those voters that the more conservative the Supreme Court, the more likely Obamacare will be struck down.
Professor, one final question. It's something that's been on my mind all through the weekend. Our childhood and our upbringing is that presidents can't control their justice picks, and that whether they're liberal or conservative, they can shift over time. Excuse me. Yeah. Is this changed? Are we so polarized as a nation that the president can go into his selection knowing it'll be a lock for conservative thought and theory?
Yeah, Tom, I agree with you. I remember there was a day and a time where a president would first sound out the other side with respect to a possible pick and so forth. And this is not, there's just none of that now. And we're in, personally, I think we're in dangerous territory. If Trump and McConnell push forward on this, it provides, and the Republicans lose the Senate, I think we can expect Democrats to talk about increasing the size of the Supreme Court. I don't think these are good things for the United States.
Now that will be seen
on either side. This is just not what the country needs at this point. And but I'm afraid we're right on that edge right now.
Peter Trubowitz of the London School of Economics, professor of international relations. We're thrilled that he could join us this morning, and certainly a set of ideas floating around for Democrats if they take the presidency, if they take the Senate, of some form of permanence to the change in the process. We'll be looking at the legal process in the coming days. Thrilled that David Weston will be joining us in the 6 o'clock hour. How about an important interview? A dissenter, Robert Kaplan. I believe these are his first comments since his dissent at the meeting last week. This is an extremely important interview. Michael McKee in conversation with President Kaplan of the Dallas Fed. Please stay with us. Futures at negative 600 have improved. Dow futures at negative 464, SPX at negative 49. This is Bloomberg.
We never thought COVID-19 is going to hit us. But now, looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the GBA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have a second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. We're watching markets which are more than difficult. The VIX on 4 big figures make it 3.60 right now, 29.43. Some real upset out there, not only about the pandemic and potential lockdowns, including in the United Kingdom, but also, of course, stimulus has drifted away in thought in America, of course, over the uproar of the death of Ruth Bader Ginsburg and who will replace her. Right now on the banking front, there's any number of uproars. Joining us for a 3-hour conversation, Jonathan Tice of Bloomberg Intelligence. And Jonathan, I hate to say it, but it's an elegant chart, and that is the plunge and persistency of plunge of HSBC. I would suggest, Jonathan, that if that bank was an American bank, it would be front and center on the mind of institutional authorities. Are the British or those in China concerned about the descent of HSBC?
Well, I think you'd be hard-pressed to find a bank that's kind of more squeezed. Our report's called a rock and a hard place. You think about US versus China, you think about sanctions, you think about negative rates, now in the UK. And you put on top of that more unhelpful headlines, although the bank is saying actually all of this data is already predated by their deferred prosecution agreement from 2017. So it's a sort of a perfect storm of international sanctions risk, international relations souring between the US and China, and just a horrible place and time to be a bank anyway.
Okay, but Jonathan, if you're the chief executive of HSBC, you know, fairly new in the job, how do you try and get ahead of this with investors?
Well, he's been at the bank for 30 years, and unfortunately, I mean, there isn't an easy fix for this, and we've sort of posited in some of our reports that actually, would you build a bank like this today? The answer is no. So then you've got to rethink, do you have a dual listing in the UK and in China, when quite clearly the growth potential is in China, but the Chinese weren't happy about the PRI telling the bank to stop paying dividends, for example, and the greater this sort of stress continues, the longer it continues, I mean, you do have to wonder about whether this is a sustainable structure for the bank.
Exactly. I mean, I'm looking at price to book, and it's stunning, folks, to see Barclays with a lower ratio of book than HSBC, at least according to the Bloomberg quick look. But John Tice, there's got to be regulatory effort here to say to these banks, do something, consolidate, combine, whatever it is. Is that tension out there? Are there authorities saying, HSBC, this is untenable?
Well, HSBC is very well capitalized. So we're not worried about solvency. We're worried about estimates and revenues and kind of where does the growth come from with this bank. And you've got two different sort of masters. You've got the UK-European angle. And let's not forget, they have said we're going to cut $4.5 billion of costs. That's not enough. They need to do more. M&A for HSBC doesn't make any sense. If anything, you look at its US footprint and think, why is some of that there? You look at some of its investment banking footprint and say, why is some of that there? Well, the bank's already put its hands up and said all this. The issue is, as ever with HSBC, they're taking their time.
Exactly.
So they're not going to give us a new strategy until 4Q results.
Francine, I can't convey enough the importance of what John Tice just said about they're taking their time. That's the legacy of this bank back 30 years.
Right, but Jonathan, if you look at, you know, some of the things that came out with this international consortium of investigative journalists, and, you know, you said that a lot of it we knew, but does it implicate the U.S. banks as well?
Well, it mentions an awful lot of banks. I think what it does, it just reminds us that we've seen all these sanctions, multi-billion fines, and the regulators talked about anti-money laundering. But if you were allowed to flag to the regulator that there's a suspicious transaction but continue acting on behalf of the client, there's still something very wrong with the system. And I think the other observation I would make, HSBC is probably sitting there wondering what happens with the election. Does the whole angle with China-US change if you get a Biden victory? And I'd leave that to you two to debate. But from their perspective, they can't undo their global footprint. They can, over the next 18 months, cut a lot of costs. They need China for growth. And at the moment, China's kind of got them over a barrel. And you've got the UK regulator looking at that closely.
All right, Jonathan, thank you so much. We'll have plenty more of Jonathan Tice throughout the day and coming weeks and months. Bloomberg Intelligence Senior Banks Analyst. Now, coming up, Christine Lagarde will speak at the German-French Parliamentary Committee meeting today. We'll bring you live coverage starting at 8 a.m. in New York, 1 p.m. in London. One of the things, of course, that she could talk about is PEP. We'll have, of course, much more on this ECB launching a review of the pandemic bond buying program. That's according to media reports. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Preston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. A global crackdown on banks doesn't seem to have curbed suspicious activity. Leaked documents tied to more than $2 trillion of transactions show some lenders continue to profit even after the U.S. imposed penalties on them. The so-called FinCEN files were released over the weekend by a consortium of investigative journalists after being obtained by BuzzFeed News. And the founder of electric vehicle company Nikola is stepping down as chairman. That's as the company finds itself in the crosshairs of a short seller who says it deceived investors about its prospects. Those claims are now subject of a probe by the SEC and reportedly also the Department of Justice. And that is your latest Bloomberg Business Flash. Tom Francine.
All right, Ritika, thanks so much. On the data, well, we've improved off the last half an hour. Negative 600 on the Dow, now negative 461. S&P futures at negative 48 as well. Francine, the VIX, 29.45, up 3 big figures.
Yeah, I'm looking at European stocks, so they're definitely falling the most since July. Look, it's airlines, travel companies leading losses. We also had a couple of concerns around the banks. We spoke to our Jonathan Tice about it, and virus casing in general are climbing across Europe. Coming up, we speak with Stephen King, HSBC Senior Economic Advisor. This is Bloomberg.
Particularly, sort of the technology landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher.
It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, new virus restrictions could be coming to London. The UK Health Secretary, Matt Hancock, tells ITV that the nation faces a tipping point in the coronavirus pandemic and that any new measures will be different to the first lockdown. Well, joining us now is Stephen King. He's HSBC Senior Economic Advisor. Stephen, thank you so much for joining us. There's quite a lot going on when you look at economies around the world. I mean, I guess a lot of your economic assumptions were based on a gradual recovery. If we do have extra restrictions, or in certain cases even a possible second lockdown in Europe, what does that mean for forecasts?
It basically means that most economists should hire some epidemiologists to help them, because at the end of the day, the lockdowns are very much determining the economic trajectory. So if you go back to, say, February or March of this year, and you think about what we didn't know at that stage and what we should have known, the epidemiology was the most important part of the story, and the lockdown policies were equally incredibly important. So if it turns out that health advisors and so on suggest that we should have either a partial lockdown or a full lockdown, obviously that changes completely the kinds of economic assumptions that people have been making. I mean, bear in mind that most economists have said, well, we gradually unlock, we gradually return to normal, we'll gradually get to a point whereby we'll have some kind of vaccine. But we now know, I think partly through the experiences of France and Spain, but also increasingly the UK, that even though the infection died away to a degree over the summer, it's coming back pretty rapidly. And under those circumstances, clearly health protocols will change again.
But Stephen, does it also mean that we just need to learn how to live with the virus? And so, does it change actually the compositions of our economies?
Well, I think those things are already changing to a degree. And in fact, one of the things I think Rishi Sunak, the Chancellor of the Exchequer in the UK, is beginning to recognise is that furlough schemes are incredibly blunt instruments. You can certainly keep people at home and effectively pay them as if they were at work. But by doing that, you're not necessarily creating the kinds of signals that will shift resources from one part of the economy to another. So we need more in the way of delivery drivers and fewer in the way of airline pilots, basically. And that sort of thing probably will have to change in the months and years ahead. Of course, guessing what the world looks like after the pandemic is over is tricky. But I think we do now know that you can do things through Zoom that didn't seem to be plausible just a handful of months ago. And as Zoom takes off and other related connections take off, then you can imagine that things like business travel will be much lower in volume in the future than they have been in the recent past.
Stephen King, good morning. Tom Keene in New York. When you talk to your HSBC team, what do they say about the desire to continue income substitution? The United Kingdom clearly has done that better than the United States. Is there ability, given the turning of the pandemic, to continue income support?
Well, it gets increasingly expensive, of course, because the more you do of this, the more you're adding to the budget deficit and basically building up higher levels of government debt. And if I were at the Treasury, I'd be sort of thinking, well, I feel a little bit uneasy about that idea of continuous additions to debt. I suspect what's going to happen is that as the furlough scheme comes to an end, and it will come to an end, I think, by the end of October, there'll be attempts to replace it with something else, perhaps something that is closer to allowing the market to play some kind of role. So one possibility would be to have, we might describe as negative employers' national insurance contributions. In other words, that the government effectively subsidizes employers to bring workers back, to actually having them doing work rather than being furloughed at home. Now, a subsidy means that some people who would otherwise have lost their jobs will keep their jobs, but it will be no guarantee that everyone will keep their jobs, but it will be also a way of signaling that perhaps those who are in the more vulnerable areas, frankly, need to look for opportunities elsewhere, no matter how difficult that might be in the very near term.
Tell me about the grave new United Kingdom. I mean, there's a lot going on here. There's a lot to unpack. And one of the great metrics of that over the eons has been sterling. Can you model weak sterling? Is that what David Bloom's telling you?
Well, the issue with sterling is that, in one sense, the government and the Bank of England are trying to do things that, to my mind, would suggest that sterling is a kind of a vulnerable area. So if you've got a government that's adding more and more to borrowing and to debt, and you have a central bank that's basically threatening to offer negative interest rates, and they haven't quite got there yet, but nevertheless the Bank of England is certainly making noises in that direction, then that combination of loose monetary and fiscal policy, traditionally you would associate perhaps with a softening of the currency. Now add to that the uncertainties over Brexit, the possibility of a no-deal departure from the EU's single market, and the possibility that as a consequence of that you have weaker export volumes that would otherwise be the case. The implication would be a wider balance of payments deficit, a wider budget deficit, lower interest rates, and that combination normally you'd associate with a weaker rather than stronger currency.
Stephen, do we need to start worrying about all this extra debt, or is it, a problem for 2021 and beyond?
I think there's a longer-term question as to exactly how governments manage these higher levels of debt. In the short term, I don't think it's a problem at all. I think given that interest rates are so incredibly low, it's the right thing to do in many ways to offer that kind of support. On the assumption, of course, that eventually we will have some kind of vaccine or more effective antiviral drugs or whatever might be coming our way in the months ahead. But we also know from history that when you have these big increases in government debt, there is normally some kind of reaction. There's some way in which that government debt is managed back down again. Now, in a very optimistic scenario, you have a strong rebound in economic activity, strong growth over many, many years, and that gives you the revenue growth for the government that actually allows budget.
Stephen King, thanks so much, of HSBC. Of course, Stephen stays with us. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom. China is ratcheting up tensions in the Taiwan Strait, hoping to deter Taipei from deeper ties with the U.S. In a series of military exercises, China repeatedly breached the median line separating the two countries. Beijing regards the island as part of its territory, even though it's been ruled separately for more than 70 years. India added another 87,000 coronavirus cases to its tally today. That pushes the country's total to nearly 5.5 million. India has the world's largest COVID-19 outbreak behind the United States. The country says 3 vaccines are in different stages of clinical trials. And a woman suspected of sending an envelope to the White House containing the poison ricin was arrested over the weekend. Officials say she was taken into custody at the U.S.-Canadian border whilst trying to enter the United States. Her name wasn't released, but officials say her arrest comes nearly a year after she was deported from the U.S. for engaging in criminal activity. The letter was intercepted last week before it reached the White House. Global News, 24 hours a day on air, and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. You've got much more to come, particularly on the debates of Washington, D.C. David Weston will be joining us in the next hour. Thrilled to have him with us. Later on, Bloomberg Technology, 5-ish hour this afternoon, the Republican from Tennessee, Senator Blackburn. This is Bloomberg. Good morning.
has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Where you need help is restaurants and things like that. And so the next round of stimulus ought to be focused again on the areas that need the most help. And so PPP, the next round, should there be a second bite at the apple? I think so for the certain companies, because this went on longer than we thought it was going to go on. And so we need to help those companies.
Brian Moynihan in conversation with David Weston there on the changes that we're seeing, and of course the huge shift over the weekend as stimulus drifts away. Seeing it in the market with futures at negative 58, Dow futures at negative 555, and the VIX up a solid 4 points. And what is important is this is really correlated. I want to draw to your attention that 10-year real yield is finally breaking down. I haven't looked at the chart yet, but a negative 1.02 on the real yield is a really important statistic. We'll have to watch that closely here with dollar strength this morning. With us is Stephen King. He is with HSBC, their senior economic advisor. He's coming to us after a 2-hour romp. Lang Lang and gramophone this week on piano, and of course King with his gorgeous piano behind him as well, killing me here with all the time he has to spend quarantined away to work on piano. Stephen King, I want to go to the Grave New World. And as I've been talking about digital dominance, which can be positive or negative, you have spoken of the dark side of technology. Give us an update there on the challenges of technology, given the challenges we see now in our political economy.
Well, one challenge of technology actually is social media, because social media tends to encourage herding, and it tends to allow people to find people that they already agree with, rather than people who might actually challenge their views. And as a consequence, you end up with views being reinforced rather than challenged, and you tend to get a kind of polarization in society, which we clearly have seen over the last few years. Economically, one of the big changes that's coming through is effectively, I think, a move towards more in the way of reshoring. So the rise of AI and robotics means that companies who were looking for cheap workers elsewhere in the world can actually install even cheaper machines at home. And I think that COVID-19, through its emphasis on global supply chains and their possible vulnerability, may actually encourage that process of bringing investment back home. Now, that may be fine for some countries, but particularly for many parts of the emerging world, that may leave them more vulnerable, because it'll be more difficult to attract the kind of capital they might have hoped to have attracted over previous decades.
Well, the technology can change, and that may be fine, but Stephen King, it is being buffeted now by all of these issues that we have. Do you just presume subpar economic growth, and do you presume that for a long time?
I don't presume it, but I think the evidence is already there and has been there for quite some time. If you go back to the beginnings of the US economic slowdown on a structural basis, it probably began maybe in 2002 or 2003, so long before the global financial crisis. And arguably the attempt to try to boost the US economy after the tech bubble burst by leading to a housing boom just actually undermined it even further, the underlying growth potential of the US economy. And one thing that's worth noting here is that technology alone isn't a guarantee of return to the kind of fast growth that the US and Europe experienced in the 50s through to the 1990s. That also depended on demographics, on the massive opening up of world trade, of a huge expansion of tertiary education, of changing legislation to get more women in the workforce. All these were incredibly positive stories, and it's difficult to repeat them decade after decade after decade. So some of that sort of impetus has now faded, even allowing for the fact that technology continues to advance.
Stephen, when you look at some of the downfall of trade and some of the protectionist stance, is this pandemic and this recession going to have a lot more countries be even more inward-looking?
Well, I think you're going to see much more language of the kind of talk of national champions and strategic industries, the kind of language we would have seen back in the 1950s and 1960s, frankly. But of course, there are also other issues out there which predate the COVID-19 crisis, which have been bubbling away for quite a long period of time. Most obviously, Sino-US relations, the fact that the US isn't quite sure as to what its leadership role in the world ought to be in the future compared with the last few decades. All these things matter. And I think also there are sort of differing views as to the kind of role that international institutions should be playing in the 21st century. Again, that's all pretty important for the years ahead.
Stephen, thanks so much. Stephen King, their HSBC Senior Economic Advisor. Now, coming up later this evening, the St. Louis Fed President, James Bullard, an exclusive conversation with our Kathleen Hayes. That's at 6:30 p.m. in New York. That's 11:30 p.m. in London. And this is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix in London, Tom Keene in New York. It is an extraordinary Monday, maybe the busiest news flow on a Monday that I've seen in 5, 6, 7, 8, you count them, years. Futures deteriorate and roll over a second time here in the last moments. S&P futures at negative 63, the level 3253, and Dow futures just gave me a negative 600. There it is again, negative 600 in the Dow, 27,011. We are near, but not at a 10% correction on S&P 500. Critically, we see correlation across most spaces. I really want to point out the real yield, negative 1.02%. I still haven't had time to chart that to find out where that support is, if there is any. Oil really doesn't play, a little bit weaker, 40.22. Dollar stronger, that's important, with attendant yen strength, 104.10. Francine looking at sterling, 128.40. That'll be interesting to see a 127 print. Right now, to synthesize a weekend, there's no one better than Martin Schenker. He's our chief content officer and has the ability to fold in the politics with the economics and with the markets as well. Marty, I want to start with what you've learned from the Bloomberg legal team, which is first rate, whether it's Cass Sunstein up at Harvard or our wonderful Greg Storr. What has your attention on this Monday morning?
Well, clearly the political landscape changed over the weekend with Ruth Bader Ginsburg's death. The question I have is really, how much is this actually going to change people's view of who to vote for on November 3rd? And I have a suspicion it actually won't have a huge impact, and that there are some bread and butter issues that you cannot ignore once you get past the Supreme Court.
What are those bread and butter issues?
Just the fact that 10 million or so Americans don't have a job, that, you know, if you look at the UK, a spike in coronavirus cases may force a national lockdown, and the prospect of a resurgence of the virus here could very well change the dynamic of this election much more than the Supreme Court controversy.
But Marty, then why are the polls so close?
Well, I mean, if you look at the polls, it's single digits when you talk to Trump supporters and Biden supporters. Is anything going to change your vote? So people are really locked into their positions regardless of what's happening. And, Trump has 40 to 45% of the vote locked in, and Joe Biden has slightly higher than that. So it's going to come down to, the battleground states that we all know.
Marty, one thing that, we've been trying to figure out is, first of all, can President Trump actually replace Ruth Bader Ginsburg before the election?
Well, there's no question he's going to try to do that. And frankly, one of the things to reflect on is, what if this was Barack Obama and he had a vacancy leading into his second term? The discussion would be quite different, I think. So he is going to move ahead. And what really is startling is you may get a confirmation vote after November 3rd, when many members of the Senate may be casting their vote as lame ducks. And I think that is not a happy prospect for the reputation of the court.
Well, the reputation of the court, Marty, and part of this is the reputation of the political economy we live in as well, in the markets. With the markets, I mean, we're seeing the impact today, negative 600 Dow futures, SPX, negative 60 as well. I'm going to go all Greenspan on you. Do you believe that the stock market, clearly the president follows it, but is it a measurement of these tensions America faces?
It is. I mean, Tom, as long as I've been doing this, we've always considered the stock market a precursor rather than a backward-looking indicator. So, this is one morning. It looks pretty grim this morning. But if this continues, and as we talked about before, I think the Supreme Court controversy will go to the background and people will start focusing on their 401ks and their own economic well-being.
And again, it comes down, I guess, to the statistic you just gave, which is 10 million, which is, we go back to conventional economics. When you talk to Craig Gordon, our Washington team, when you talk to our economic team, do they presume the slowdown that many are speaking of?
Well, certainly that was Jay Powell's view when he, in his policy statement, he was clearly signaling a concern over a possible downturn, and he was doing everything he could to make sure that they make conditions accommodative to counter that. But I think that there is a real concern that we may get another downturn in this economy, which, leading into November 3rd, which would be bad news for Donald Trump.
So Marty, if what does Donald Trump have to do in the next couple of weeks? I mean, even if the economy turns, could he spin it with tax cuts?
Well, I don't think there's enough time to do anything with tax cuts or policy changes. I mean, among other things, the Senate is going, and to a certain extent, the House are going to be obsessed with the Supreme Court nomination. So, and we know that stimulus was basically being put off until after the election regardless. So I don't think there's the prospect of Donald Trump producing any kind of October surprise from a policy standpoint. But this does afford him an opportunity to solidify his base, for sure.
Okay, does the TikTok deal filter through, the election? Like, what will sway a voter that's undecided?
Well, as I said earlier, I think that there's a tendency to overemphasize the Supreme Court issue over local issues. I mean, the saying is all politics is local, and nothing's more true among undecided voters. It's what's happening in their homes, in their families, and in their local districts that's going to determine probably who's going to win this election.
Marty Schenker, thank you so much. It's going to be an eventful week, to say the least. Get your flak jacket on. He's our chief content officer as well. And we really need to make a note of the date of 40-some days until the election. But just as importantly, September 29 beckons. I haven't done the count on the famed Bloomberg calendar, but I think I can say 29 take away 21 is, Megan, that's what, 8 days? That's like 8 days a week? 8 days till a presidential debate, which is really quite extraordinary, maybe should be front and center. Front and center for the Bloomberg world, and we'll have this through you all morning. I'm going back and forth with John Farrell right now with futures negative 57, Dow futures negative 534, and the VIX out 444, big figures. Yields come in, it's telling, but not a breakdown yet. And again, I'm watching that 10-year real yield breaking down from negative 1.00 to negative 1.02. Really nice dollar strength is, well, 104.16 on yen, 117.88 on euro. Coming up, Ron Temple, Lazard.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This morning, suddenly, a different election, a different first debate in 8 days. It will be a different 43-day dash. Republicans, they count Senate votes. Democrats threaten a January revolution. Trump and McConnell consider a Notre Dame law professor or the daughter of Cuban exiles to replace Ruth Bader Ginsburg. Markets, they react in the last hour is the hope of fiscal stimulus. It evaporates, the yen ever stronger, the real yield lower and broader. And on the cusp of 200,000 dead in America, India, France, and yes, the United Kingdom, they consider renewed lockdowns. Good morning, everyone. Bloomberg surveillance, an extraordinary Monday morning. I'm Tom Keene in New York, Francine Lacroix in London. Francine, I know we're going to focus so much on these markets. Futures negative 57, and yes, we must focus on Washington, but I would suggest, Francine, the news flow out of the United Kingdom is absolutely extraordinary. What are the people of the United Kingdom listening to from Mr. Hancock as he helps his prime minister?
Well, Tom, just going back to the markets, I think everything's in flux, right? So there's very little certainty about how, the death of the Justice Ruth Bader Ginsburg will play in the election. Here, there's a lot of unknowns about whether we go into some kind of lockdown or further restrictions in London and in the UK, and that's what people will want to know from Mr. Hancock. People also try to understand what it means for travel and leisure companies. So there's just a lot of uncertainty that you could see in the UK or other parts of the world, and it seems to be playing out really at the forefront of the markets.
And the uncertainty as well carrying over to the tech space, 2% move there. We're not to a correction yet on Standard & Poor's 500, but really, truly on the cusp of a formal correction. Right now, with the briefing, our first read news in New York City. Here's Ritika Gupta.
Morning, Tom. Francine. The death of Justice Ruth Bader Ginsburg has thrust the Supreme Court into the political spotlight. Republican leaders in the Senate are hoping to rush through a replacement, with President Donald Trump expected to nominate his pick this week. But Democrats are warning of a constitutional crisis if Joe Biden wins the election, but Trump's candidate is still confirmed to the Supreme Court. President Trump is celebrating the TikTok deal despite it falling short on some of his key demands. The app's Chinese owner will still have an 80% stake in the new company, but the White House gets a U.S. headquarters for the business and the promise of new jobs. Sources have told Bloomberg that TikTok is seeking a valuation of $60 billion as part of the U.S. deal. And U.S. Secretary of State Mike Pompeo is lashing out at Europe for supporting what he calls the silly Iran deal. He says governments have privately told him that the U.S. is right, even if they won't publicly acknowledge it. The U.S. plans to tighten restrictions on Iran, what it calls a snapback of sanctions on the country. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Let me look at the data right now. Futures negative 61, Dow futures negative 568. The VIX really widens out 30.32. It really reverts back to the tension of 10, 15 days ago. Again, that real yield negative 1.01. I'm watching that very carefully. That calculus of the nominal 10-year yield with the inflation break even. But the real point today, Francine, is the litmus paper of the dollar. Let me begin with the developed countries. DXY 93.31, yen 104.16 stronger, yen weaker, euro 117.87. I'll let you talk sterling. Francine, I should know Turkish lira moments ago prints 7.60. That is 7.40 to 7.50 to 7.60 with distressing speed.
Yeah, so we're looking at that. We're looking at travel and airline shares here in Europe. They're definitely leading the losses. Oil dropping to $40 a barrel in New York on demand concern, Tom. So it seems that a lot of headwinds or a lot of uncertainty are kind of coming to the forefront all at once. And I'm also looking at some banking stocks dropping following a story by the International Consortium of Investigative Journalists, Tom.
Very good. We're going to begin our coverage here, and again, focused on the markets today with significant moves. We've got some other things to speak of. David Weston, we're thrilled, will join us, scheduled to be in the bottom of this hour. But right now, we needed to go out and find someone who has breathed the same air of the hallways of Columbia Law School as Ruth Bader Ginsburg did. And we're thrilled now to bring you Kimberly Robinson to help us with Bloomberg Law. Kimberly, one of the great moments here in all of this is the path of Ruth Bader Ginsburg from gender issues and discrimination issues over to voting rights. I think that's been underplayed. Tell us about Ruth Bader Ginsburg in her final years addressing the voter rights debate.
Well, sure. I think it may come as a surprise to some of the listeners that Ruth Bader Ginsburg was actually billed as the consensus nominee whenever she was first put on the court. She was seen as somebody who could really bridge the gap between the left and the right. But as the membership on the court shifted around her, she came to be known as a great dissenter, and particularly in Shelby County versus Holder, a case dealing with the Voting Rights Act, where she really took on this kind of pop icon status as we know her today. You know, I think one of the lines that really brought her a lot of fame is one in this Voting Rights Act case where she chided the majority for doing away with the Voting Rights Act, even though it was working. She said it was something akin to throwing away your umbrella in a rainstorm just because you're not getting wet.
When you look at some of the things actually that we also need to look at, Kimberly, I mean, can Trump actually replace her before the election? Does he have time to replace her?
Well, if you're speaking constitutionally, there are really few rules about what a president can do and what the Senate can do, although we're hearing a lot about what the history has been. But certainly the president can nominate someone this close to the election, but the timing is a problem. We've seen over the modern era that it takes about 70 days on average to confirm someone. So that's a really tight deadline before the election or even before the new Congress takes over in January.
Kimberly, I want to go to your legal expertise, and we're thrilled. You know, I have to say this, folks, to have Kimberly Robertson and Greg Stohr with us is really to our advantage. And you know, the others in the industry, Kimberly, Linda Greenhouse at the New York Times, Mr. Barrett over at the Washington Post. Do all of you together presume that a conservative appointee will stay forever conservative, or a liberal appointee will stay forever liberal? Or can we see the shock that you've studied that justices change over time? Is that era over?
Well, there has been a really concerted push on the right to make sure that that era is over. We see a lot of people who are looking for nominees who do have some kind of a tangible track record, so that they can assure that this nominee is going to be conservative, or at least as conservative as possible. But once a Supreme Court nominee gets on the court, they're there for life. And so we've seen even President Trump's nominees stray from what you might expect to be the conservative line. And here I'm speaking most notably about Justice Neil Gorsuch, who in the last term voted to extend protections in employment to LGBT workers. So, you know, it's really a question mark, I think, once nominees get on the court with a lifetime appointment.
Don't be a stranger. Kimberly Robertson, I'm sure we'll be speaking to you in the coming weeks of this historic moment for the nation. Writing with Greg Stohr for Bloomberg News. Coming up on Bloomberg Surveillance, Robert Kaplan, without question, the economic conversation of the day, or Michael McKee, in conversation with a dissenter from Dallas. Futures at -59. This is Bloomberg.
never thought COVID-19 is going to hit us. But now, looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the growth GBA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have a second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified. Good morning, everyone. Bloomberg Surveillance. We welcome all of you. Francine Lacroix and Tom Keene here with a distressing market, to say the least. Futures negative 58. Worse earlier, but still we're trading right near weakness for the day. Right now on the markets, and I'm moving forward in the cacophony of this news. Ronald Temple joins us. He's with Lazard Asset Management, co-head of multi-asset and head of all of their U.S. equity strategy. Ron, what do you do when the news flows like this?
Well, I think the most important thing is to take a long-term perspective and step back and think about what you want to own in the market, and understand what the short-term movements can mean in terms of timing for you to get into new positions you might want or exit some other ones. But I think it's really important to zoom out and take everything into account in terms of the long term and understanding what you're paying and what you're getting. But, you know, there's always noise in the market. There's always volatility. And my view has always been the volatility creates opportunity.
Well, exactly. The volatility can be called a correction, and we're right there on SPX. I have to do the math. I believe we're at 9.5% down from the peak. Great. A correction is opportunity, but we freeze in our tracks in fear. Where is the greatest opportunity given this correction so I can unfear myself?
Well, I do think there's still downside ahead of us, actually. In terms of the backdrop for the fourth quarter, I think it's pretty challenging at this point. And admittedly, you know, if we look at what happened over the weekend with the loss of Ruth Bader Ginsburg, I mean, truly a giant of the Supreme Court, I think the debate over that vacancy could suck what little oxygen was left in the room out of the room in D.C. And so, you know, this is an increase in partisan animosity in the run-up to the election is probably an outcome of that. And if I think about that combined with a resurgent COVID pandemic in Europe, the arrival of flu season in the U.S., you've got quite a few things lining up against the optimistic view. And I do think, by the way, in terms of sucking the oxygen out of the room in D.C., the probability of another stimulus act probably is going down even more with this